Good morning from our global headquarters in New York. I'm Menace Craney. You're welcome to Bloomberg Brief. Let's set your agenda. Ueda remains a careful but clear hawk. A BOJ hike is still on the table. Yen rallies across the board. Laying the groundwork for policy action. Fed Chair Jerome Powell speaks today at Jackson Hole. Bloomberg is live from Wyoming. Vibes heavy, policy light. Vice President Harris formally accepts the nomination as the Democratic presidential candidate. Good morning. It is about the quality of the narrative for the cut that you all so expect. Yes, a lovely phrase from Jonathan Farrow and the team on surveillance. This market is expecting hard landing cuts to satiate a soft landing narrative. Stocks are prevaricating at the moment. The bar is very high for Powell, really to outdove the market. That's BMO's view. Susan Collins sets the table for the language, that sort of progressive, gradual, methodical process that we expect. Goldman's were with me yesterday saying it will be just very, very sort of tepid language. Nvidia's bid this morning up 1.4%. Again, it depends which research you read, whether Nvidia is the more important market event for sentiment than Jerome Powell. Either way, you look at the bond market, we're still above 4% on the very short end of the curve. Curb your enthusiasm. That's basically the message coming from the analyst community and indeed coming from the pre-Powell Fed speak. You take the elevator up, you are on the escalator, very slower to the lower ground. So curb your enthusiasm on 50 basis points in September. Let's see whether Powell reinforces that a little bit later on. And then yen. I thought what was fascinating, Ueda stuck to his hawkish guns from where I'm looking and really sort of said, look, we're still there. Policy remains accommodative, even though we hiked rates in July. You've seen a little bit of yen buying, but I love what Pictet say. Nothing too serious. The real moment comes a little bit later on today with Powell. And with that in mind, we are counting down to the Fed Chair Jerome Powell's speech. It is at 10 a.m. Eastern. We'll bring that to you. And it's got the markets. Will they get a clear message? Of course, as I say, you have Governor Ueda at the BOJ still saying that a hike is on the table. Let's bring in the team, lay the table for you. Rachel Evans and Ven Ram are with me. Ven, good morning to you. I like what Mizuho had to say, which is the BOJ, Ueda remain cautious. The real scary part is, of course, what happens from Powell. But if I reflect on Ueda, I would say it's a central banker who remains committed to his hawkish position, and pretty much true to the sense of, I did the right thing.
Absolutely, Manus. I think you had made it pretty clear that if the economy performs as the BOJ expects it to, the central bank will continue raising rates. But I'm not too sure the markets have got that message. If you look at the yen, it's hardly doing anything on the day. So the markets are
we've just frozen there.
Glossing over the prospect to rattle the markets. The BOJ is not going to rattle the markets. They're not going to raise rates again by the end of the year. I don't think that's a viable proposition. In fact, if you look at the markets, they're not even pricing in a hike by, fully pricing in a hike by June next year. I think the markets are completely mispricing the BOJ's intent here. It's useful to keep in mind that the BOJ's mandate is the economy, not what happens to the stock market. They didn't say, but that's clearly the intent. Make no mistake, the BOJ is going to normalize policy and going to raise rates gradually.
Yeah, Van, it's interesting, as you say, the market is mispricing the BOJ, but then the market, one could say, Rachel, good morning to you. The market is so aggressively mispricing the Fed. If you listen to everything that we're being told this week, which is there is this divergence between what the market is expecting, 100 basis points, relative to the Fed speak that we've been given by Collins, by Schmidt, etc. Schmidt wants more evidence. Collins wants a calibration that is certainly not in line with the market. How mispriced is the bond market for Jackson Hole? Good morning.
Good morning. Yeah, no, I think, that's going to be the big question mark for the markets over the next few weeks is really how much of a pullback do we see as we see Powell speak today. Then we obviously have the Fed meeting and where we're expecting to see that first cut. But what is the rhetoric that comes out from the Federal Reserve sort of around those cuts? We know that they are heading for easing, but the degree that that is going to be, as you say, steady as she goes, the elevator, not the lift. I think that's going to be sort of very, very interesting to see. economy. And Powell really, in past speeches at Jackson Hole, there hasn't been a huge reaction on the market side. We've typically seen 4 or 5 basis points in either direction, depending on whether it's a hawkish or a dovish message. So we may well be underwhelmed today in terms of the actual direction that we get from Powell for markets. So I think there's going to be a lot more focus as we kind of come out of Jackson Hole. Yes, on his words, on the sort of aggressiveness or lack of aggression that he's showing as it relates to cuts, but also, again, back on that data, because ultimately Powell has been very, very clear that the data is what's going to lead things. And at the moment, there's a lot of that suggests that the economy is not slowing down particularly fast and things remain relatively robust.
The other narrative that we're hearing, Mohamed Al-Arian was with us yesterday morning, and he said, look, Powell's mission here should be to deliver a clarity around the equilibrium rate and maybe how quickly he wants to get there. Of course, that's going to be data dependent, I know. But how much clarity do you think we will get around the new equilibrium rate?
Yeah, I mean, this tends to be a very academic conference. So in terms of what we can kind of draw from these comments and from the papers that are given and the remarks on the sidelines in terms of real world policy, it varies. The market is estimating that kind of the sort of neutral rate is around 3%, maybe 3.5%. So that would suggest kind of 2 percentage points or so of cuts. That is roughly what is priced between now and July. So at the moment, the market is seeing us getting to that neutral rate very, very fast. And I think it'll be interesting to see, just from Powell, what the indication is about how quickly they think they need to get to neutral. Do they see those signs of a hard landing lurking behind some of the strong data prints that we've actually seen in recent weeks? Or are they thinking, yeah, things are slowing, we are seeing a softening in the economy, we can go relatively slow to reduce rates? I think that's what people are going to be looking for, that nuance.
OK, Team Bloomberg, thank you very much for being with me this morning. Ram and Rachel Evans on the markets. James Athey is my guest, Marlborough Investment Management, and he writes this as we wait for Powell's remarks. Fed pricing is in the very near term does indeed look somewhat aggressive, given the communication out of the Federal Reserve. Looking further into the future, we would argue that the chances are still high that more rather than fewer cuts will be the outcome. James is with me. He's a global fund manager at Marlborough. Mr. Athey, good morning to you. So you're in there. We're going to have a slightly harder landing camp than most. Contrarian as ever. Good morning.
Morning, Manus. Yeah, not necessarily by design, but it does often seem that way. Yeah. The historical record says that soft landings are very unlikely. If you go back and look at Fed transcripts and news reports, there was a lot of talk of soft landings in 2007 as well, and we know how that ended. The two oft quoted historical analogues for soft landings, which are the early to mid-90s and the 60s, really do not bear a scrutiny when it comes to the comparison from a macro standpoint. The 90s, which is obviously the most recent and possibly the most relevant from a market perspective, unemployment was falling throughout that period from a relatively high level, around 7%. That's obviously a significant economic tailwind, and that makes it a very different scenario from today, where unemployment is rising. So the fact of the matter is that the Fed, like all central banks, is looking at data today, which tells it something about what the economy was doing several months ago, and it's trying to make decisions about where the economy will be in 6, 12 or 18 months. And that's obviously very difficult, hence why the soft landings are very rare.
The one thing I love about bond traders and bond brokers is basically just the sheer absolute self-belief. We were so far away from the Fed at the start of the year, and we are still so far away from where the Fed wants us to be. There's a musculature in terms of the positioning in this bond market. I mean, there's real flex in this bond market. They are paying for significant rate cuts for a hard landing, the size of which are for a hard landing, not a soft landing. So with that in mind, do you think the Fed today, Powell, needs to walk us back from that appetite for 50? Is that his mission today, or what is the objective today?
At the risk of being a little disagreeable, Manus, I'm going to say
Please
I don't think the market is at all priced for a hard landing. Quite the opposite. I think a couple of 100 basis points. The market's priced for, 230 basis points or so in totality. That is taking us roughly back to neutral. As Mohamed Al-Arian has pointed out, we don't really know, and the Fed doesn't really know. But roughly, that is where the Fed is telling us at the moment neutral is. So if we see 2 to 250 bips, that would be in keeping with a soft landing. In order to ease ease policy relative, to neutral in order to support the economy in a recession, the Fed would have to go further than that. So what the market, in my opinion, is doing is looking at the probability distribution. The right tail has been severely clipped and curtailed. The chances of us having a re-acceleration that pushes inflation meaningfully higher in an environment where the labour market, by all metrics, is softening to varying degrees depending on which data you look at, but by all metrics the labour market is softening, and that obviously reduces upward wage pressure, and that reduces the ability to get that self-fulfilling price wage spiral, and obviously that's what the Fed is looking at. The market, however, is therefore saying, well, if the right tail is clipped, there is still some percentage chance, banks have it between 15 and maybe 35% chance of a recession. And in a recession, the Fed normally, traditionally, on average, cuts around 500 basis points. That distribution of probabilities means that there has to be some downward skew relative to even the Fed's own modal forecast.
Okay, so the right tail has been clipped. Let's get to market action. There's a couple of different things going on here. I want to square away the dollar. You say on these dips that we've had and the dollar's given back pretty much all of this year's gains, you're reloading up on the dollar. Why?
Yeah, the dollar serves two masters, obviously. I like Mr. Jen's dollar smile framework. I think it's simple, but it's very effective and very accurate in describing the dollar's behavior. So we found ourselves in the middle of the dollar smile. The market likes that because it tends to support risk assets. And obviously the market tends to be positioned long in risk assets. From here, there are possibly two outcomes, we would say, in the sort of short to medium term. One is that, as we've already talked about, 33 bips priced for the September meeting looks too much. Potentially 100 bips by year end looks too much, and potentially either the Fed or the data will cause the market to walk that back, and that should support the dollar via higher rate differentials. The other alternative really is that at some stage we do find the data deteriorating more meaningfully, and we do find ourselves in a more aggressive rate cutting environment, but history says that tends to be accompanied with risk off and a flight to safety. So we're in the middle of the smile, but we think the routes to either end of the dollar smile over the short to medium term are actually quite easy to get to.
Can I take the other side of that trade? If you're a buyer of the dollar, are you a seller of the yen? And do you believe, as Ven just said, is that the market, not me, the market has mispriced the proclivity for the Bank of Japan to get through more rate hikes in the autumn, which I got to say is not what I'm hearing from people on my IB.
No, quite the opposite. We like the yen. We have done for a while, and we've been adding to our long yen position. We're doing that on the crosses rather than versus the dollar. So we've been short sterling yen and we've been selling euro yen recently. Again, it's a fairly straightforward argument, which is that there's obviously quite meaningful policy divergence.
Yeah.
The Bank of Japan is trying to be hawkish. Other central banks are trying to be dovish. But again, underneath the hood, all this talk of carry trades really, I think, has focused on the most short-term investors, those that are most reactive, who have, I'm sure, cleaned up significantly their yen underweights, their carry trades. But the more meaningful position is that sort of implicit carry trade, that implicit yen underweight, which is large institutions globally and large institutions in Japan. And as the hedging cost sort of calculus shifts, as JGB yields rise relative to global yields, investment choices from those big institutional players should shift through time, and that should be supportive for the yen. And if we get a big period of risk off, obviously the yen being structurally underweight and being a safe flight to quality currency should rally hard.
Okay, James, thank you very much. Don't be too hard on the fast money.
Thanks,
it paid the bill for many. It paid my bills for many, many years. James Athey there of Marlborough with his view on the markets. Bloomberg is live at Jackson Hole, gathering throughout the day. We bring you our special coverage of Chair Powell's remarks. Our coverage begins at 9 a.m. New York time with guests including the Atlanta Fed President Raphael Bostic, former Fed President Loretta Mester, and James Bullard, plus the ECB's Mario Centeno. Other stories trending on your Bloomberg terminal this Friday morning. Goldman's deputy head of China unit is said to be leaving for HSBC. This marks the second senior exit from Goldman's China operations this year. HSBC has been bolstering its Asian roots and has made several senior hires in the past year. More bank personnel moves. UBS lost 2 members of its activism defense team to the U.S. rivals. That's according to people with knowledge of the matter. They're going to the M&A teams of Bank of America and Wells Fargo. Skydance is accusing Paramount of breaching the terms of its deal by continuing to engage with another suitor. Skydance says Paramount didn't provide written notice of an extension to the so-called go shop period. It also says the extension isn't valid because Brofman's proposal isn't superior to the Skydance offer. Coming up on the show, Vice President Harris formally accepts the Democratic Party's nomination.
I promise to be a president for all Americans. You can always trust me to put country above party and self.
We'll take a look at the policy impact of the White House race. Ed Mills from Raymond James joins me in just under 30 minutes right here on Bloomberg Brief. Context matters every day on Bloomberg.
I promise to be a president for all Americans. You can always trust me to put country above party and self, to hold sacred America's fundamental principles, from the rule of law to free and fair elections to the peaceful transfer of power.
That's Vice President Kamala Harris formally accepting the Democratic Party's nomination for president. Immediately after her speech, her Republican challenger, Donald Trump, dialed in to Fox News.
Well, the biggest reaction is, why didn't she do the things that she's complaining about? All of these things that she talked about, we're going to do this, we're going to do that, we're going to do everything, but she didn't do any of it. She could have done it 3.5 years ago. She could do it tonight by leaving the auditorium and going to Washington, D.C.
Joining me now is Vonnie Quinn. She's been in Washington through the week for this DNC conference. Vonnie, good to have you with us, closing off. I mean, beyond proposing herself as the leader for all Americans, if you dissect the messaging from Kamala Harris last night, she really went after certain chunks of policy that are going to be on the stump over the next couple of weeks. Israel, Palestine, at her global leadership, but also she really took the fight to Trump in terms of some of the big issues around tax, didn't she?
She really did, Manus, and it's surprising how large she went on some of those issues, some of the issues that she's perceived to be frail in, such as Gaza, as you said, and also border and immigration. So, yeah, she literally said that in many ways Donald Trump is an unserious man, but the consequences of putting Donald Trump back in the White House are extremely serious. So she continued on with her speech to make more criticism of Donald Trump. And remember, with just 75 days left, that's about twice as long as the amount of time we've had since the assassination attempt. It's not very long at all.
No, it's not. And I mean, just on some of those policy points, it's interesting. You know, she talks about, imagine a Donald Trump with no guardrails. How would he use the immense powers of the presidency of the United States? And just listening to that last piece from Harris, where she talks about, you know, a peaceful transfer of power. We played a little bit of former President Trump's reaction on Fox. He dialed in. The campaign response so far from their side on this speech, how would you describe that overnight?
Well, it was instant, really. I mean, he was on Truth Social through the whole speech, and then immediately after she spoke, he called in. And as you could tell from that excerpt, he was just sort of giving broad complaints about how she's done nothing. She does a lot of talking, but she doesn't do anything. And he listed all the things he was talking about: fracking, crime, housing. He said, I think he was surprised she hadn't talked more about housing. Perhaps he was prepared for that. He actually also said, other than that, it was a nice-looking room. So I think the showman in him had some respect for the DNC's slick operation, because it was, you know, a phenomenal 4 days. And again, you know, it's quite unrealistic how the DNC and the Democrats have managed to hold on to the narrative in the last 5 weeks. It's been 5 weeks since Joe Biden pulled off the ticket. It's quite hard to believe. We will, though, see in the next few days and few weeks the polling bump, should it materialise. It looks like it will. But as Kamala Harris herself said in the after parties, after accepting the nomination, there's work to be done. So celebrate tonight, but from tomorrow, we need to get on the bus and start campaigning.
Yep, the reality, those polls, that halo effect may indeed dissipate. Vonnie, thank you. Thank you for the coverage through the week. That's Vonnie Quinn in Washington. Coming up, a look at the schedule for the headlines for the rest of the day. The very latest on Canada's dispute with the rail workers. And I'll take you through some of the front pages. Good morning from the Bloomberg Brief team. Front pages from around the world this Friday morning. This is what's making the headlines. First up, we had the New York Times. The Israeli military issued new evacuation orders in the Gaza Strip, forcing more Palestinians to flee their homes and shelters once again. The US and others tried to salvage faltering talks. Next up, AP freight trains in Canada could be running again within days. The government forced the country's two major railroads into arbitration to resolve their labour dispute. The move is aimed at averting economic crises across Canada and the US. And Washington Post leads with this. The FDA has approved a new coronavirus vaccine, clearing the way for shots manufactured by Pfizer, BioNTech and Moderna to start hitting pharmacy shelves and doctors' offices within a week. Let's give you a quick snapshot. We're beating that drum to Jackson Hole, to Chair Powell's speech. We are going to discuss what that means for markets. Live to Wyoming. From our global headquarters in New York, welcome to Bloomberg Brief. I'm Menace Cranny. Let's set your agenda. UAIDA remains a careful but clear hawk. The BOJ hike is still on the table. Yen rallies across the board, laying the groundwork for policy action. Fed Chair Powell speaks today at Jackson Hole. Bloomberg is live from Wyoming. And vibes heavy, policy light. Vice President Harris formally accepts her nomination as the Democratic presidential candidate. Good morning to you. Equity markets are bid slightly this morning, up 0.4%. There's a sense of optimism that Jackson Hole will not deflate the narrative of the roadway for rates. Rates on the short end of the curve at 2%. You can pretty much say that we've got a bond market that is quite long. It's very expectant of a benevolent Jay Powell. Well, is it? Well, not if you listen to Collins et al. Yesterday. Gradual, methodical pace. Schmidt wants more evidence. So again, this bond market is slightly unsure what they're going to get from Jay Powell in Wyoming. The bar is now very high for Jay Powell to outdo his dovish expectations that are evident in the market. That's according to BMO. It's going to be slower to lower. That seems to be the catchphrase of the day. Dollar yen, that's dollar down, yen slightly better bid. UAIDA sticks to his guns more or less in front of Parliament, where he says, look, policy, it's still accommodative, even after the July hike. Look, he did nothing to refuel the unwinding of the carry trade in a furious way. Nvidia's up 1.2%, and if you read Wedbush Securities documents, they say that reporting next week is much more important than Jackson Hole. Well, that's just an equity market view. We have 5 hours until we actually hear what the view is from the Fed Chair Jerome Powell at Jackson Hole. Stuart Paul of Bloomberg Economics joins me now. Good morning. A lot of tension, a bond market that is highly expectant, still pricing 100 basis points of cuts. You listen to Mohamed El-Arian, and really we're just whistling in the wind if we're hoping to get 100 basis points of cuts. What does Powell need to do to not shake the bond market to its core? Because that's the objective, really, isn't it?
That is. I think that the first thing he needs to do is signal that a rate cut is definitely coming in September. He doesn't necessarily need to signal whether it's going to be 25 or 50, but it would be helpful if he laid a little bit of groundwork for markets to expect or to understand what would warrant a 50 basis point cut, a catch-up cut, if you will, given what we saw in the FOMC minutes. I'm not entirely convinced that Fed Chair Powell focuses so heavily on what constitutes R* or the real neutral rate of interest, but I think that he will acknowledge that monetary policy has been restrictive. It has been helpful in bringing inflation back down toward the 2% average inflation target, and in that respect, it is appropriate to gradually cut rates. And as you astutely observed, the key word this week from policymakers has been gradual.
It has. And I think Susan Collins summed it up very well herself, where she talked about gradual, methodical pace, and that lays the framework. Reflect back on Mohamed El-Arian, who was with us yesterday with Jonathan and the team yesterday, and he talked about the necessity to restore an anchor to policy, because the world every day, the world is priced off 10s, it's priced off 2s, it's priced off SOFR. The whole world literally, the system is priced off those benchmarks. And the scale of volatility that you've had at the short end of the curve has been violent, to say the least. How does he re-anchor stability?
I think that the first thing that he has to do is indicate that further deterioration in the labor market would warrant cuts, probably at 50 in September. In doing that, you set expectations for the path of monetary policy for the next 3 meetings, because you say, okay, if we have a 4.4% unemployment rate in the August jobs report, we know we're going to get a 50. We'll probably get a string of 25s thereafter. If the Fed Chair Powell were to come out and say that inflation has yet to be fully tamed, I think that you get further sell-off in the front end of the curve, and you get some more of that violence, which would really not help his cause for bringing any sort of stability or bringing any sort of clarity in this messaging.
But when I look at the break-evens and I look at the commodity complex, I don't think, I beg humble forgiveness here, it doesn't look like the break-evens or the commodity complex are implying that right tail risk. I had James Athey with me a little bit earlier, and he made a nice point, which was, the right tail risk of resurgent inflation has been clipped in his view. Would you agree? I do agree. I mean, looking at break-evens, I think that that's clear. I think that that's what's going. Of course, you can't always infer precisely from break-evens from how folks' spending behavior will evolve and what that'll then mean for inflation down the road. But I do think that right tail has been mostly clipped. I do think that it is time to start easing monetary policy and start making rates less restrictive. I think Powell, as more of a practitioner than an academic, would agree with that perspective. And I think he is going to signal a cut in September and a string of cuts thereafter. Okay, let's see how the bond market reacts, or do they get the message that they want. Stuart, thank you very much for getting up early and joining me around the desk here this morning. That's Stuart Paul, Bloomberg Economics, on the look ahead for Jackson Hole. We're live there throughout the day, so we have special coverage, both including Chair Powell's remarks. That coverage begins at 9 a.m. and then we have a roll call of people you do want to listen to. Coming up, Vice President Harris makes her case to the nation.
I promise to be a president for all Americans. You can always trust me to put country above party and self. I promise to be a president for all Americans. You can always trust me to put country above party and self, to hold sacred America's fundamental principles, from the rule of law to free and fair elections to the peaceful transfer of power.
The Vice President Harris there formally accepting the Democratic Party's nomination for president. Her opponent, Donald Trump, dialed into Fox News shortly after the speech.
Well, the biggest reaction is, why didn't she do the things that she's complaining about? All of these things that she talked about, we're going to do this, we're going to do that, we're going to do everything, but she didn't do any of it. She could have done it 3.5 years ago. She could do it tonight by leaving the auditorium and going to Washington, D.C.
Vonnie Quinn has been burning the late-night oil in Washington through the week. Vonnie, good to have you back with me. I mean, she obviously irked Trump. She called him a non-serious man. She talked about him cozying up to tyrants. Irked him to the point that Truth Social lit up, and he called into Fox. So where did she lay into Trump? Was it on the personal side or the policy?
It was interesting. It was in keeping with the theme of the whole DNC. In fact, Manus, she was talking about the protection of democracy, essentially. She said, imagine Donald Trump with no guardrails and how he would use the immense power of the presidency of the United States. This is after she laid out the arguments, as her public prosecutor personality allowed, for why not to elect Donald Trump. She said, consider not only the chaos and calamity of his time in the White House, but also the gravity of what has happened since he lost the the last election. She drew a lot of attention to the fact that he has been found guilty by a jury of fraud by everyday Americans, just like you guys, the electorate, and also found liable for committing sexual abuse. So she really did lay into him, and it can't have, been very pleasing to him to hear that. But he continued on with his poking of her, saying that she talks a lot, but that she doesn't actually do anything. Now, this is a complaint that he's been making over and over again. It's to be determined if it's landing. It doesn't seem to be very strong of a complaint. Perhaps stronger are his complaints about the border and how fragile she is on border and immigration issues. She took those on too as well in the speech. She essentially said that she would bring back the bipartisan border bill, and she gave a whole section of her speech to how she would act in the international community, where Donald Trump perhaps would cozy up to autocrats because he wants to be one.
Well, if we go back 7 days ago, we were talking about economic policy from Kamala Harris. We're talking about housing, 3 million homes, $25,000 to first-time buyers, prescription drugs, etc. One could say that there wasn't that much of a lean into economic policy last night relative to, let's say, where we have been. We know Trump has called her a comrade, Kamala, and, various monikers around this interventionist style of economic policy that she's been putting forward. Why do you think they stepped back from that last night? I think we're framing it as being sort of slightly policy light, vibe heavy, policy light. That was quite punchy.
Well, bear in mind that she is introducing herself to a huge swath of the American public that may not have taken all that much notice of the vice president before, right? First time on a stage like this where she can command complete attention. Before she had to be in the shadows a little bit. And also she was trying to appeal to not just Democrats, but perhaps lapsed Democrats, independents, Arab and Muslim voters who hadn't particularly been too pleased with the Biden administration before, and Republicans. A few minutes before she came out, Representative Adam Kinzinger got on stage and basically spoke to conservatives as if they were the entire audience and said, the Republican Party is not conservative anymore and that Democrats are as patriotic as we are. He said we as if everybody was in agreement with him. So she was definitely trying to do a lot of things in just one speech, and she kept it to 40 minutes. It was a prosecutor that really understood her brief.
Indeed, succinct as ever, like yourself. Vonnie, good to see you. Get some rest. We'll see you in New York next week. That's Vonnie Quinn, tracking the DNC throughout the week for us here on Bloomberg Brief. For more on the White House race, I'm joined now by Ed Mills, Washington policy analyst over at Raymond James. Ed, good morning to you. You've had a little bit of time to chew on this. Our headline is vibes heavy, policy light. The candidate did a lot to sell hope and joy, but avoided providing policy specifics. But the role last night was really to provide hope, joy, and maybe grab a few swing voters along the way. Was it vibe heavy, policy light for you? Good morning.
Yeah, good morning, Manus. I think that's fair. I do think the speech, to me, was broken into 4 parts. Number one, introducing herself to the American people. We have the saying, you can't introduce yourself for the first time twice, but that's really what she's trying to do here. And what we've seen since she's ascended to the top of the ticket, her favorability ratings have gone up. If you like someone, you're more likely to vote for them. Number two, prosecuting that case against Trump. We'll talk about that a little bit more. Third, outlining a little bit more of her domestic agenda. You highlighted the fact that she did not talk about price gouging, FTC. I think that was some of the most controversial parts of what she outlined, and that's where Republicans have attacked her. So not terribly surprised that she shied away from that a little bit. But was probably the most striking to me was the fourth part, was Kamala Harris as potential commander-in-chief, really outlining her views on international policy and kind of giving a strong and forceful address saying how she would be different from Donald Trump, as well as how she would rule kind of her administration on these kind of really important geopolitical issues, especially a really important portion related to the current war between Israel and Hamas.
Well, let's just unpack some of that. Can we just sort of step back for one moment? At the start of this summer, we were talking about a Republican sweep, Republican Trump trades. It was pervasive. Now, nobody is really sort of talking about a Democratic sweep. Is that folly? I mean, they're playing themselves as being the underdogs. We are the underdogs and we've got a lot of work to do. So we've pivoted from red sweep to timeout and let's rethink. How do you see the positioning for the Democrats? She's got velocity and momentum, but can that translate to something more than just the presidency for her?
Man, that's a really important point. At the beginning of the year here at Raymond James, what we told our clients was prepare for a sweep, not necessarily a Republican versus Democratic sweep, but when you add up the odds, we thought the most likely outcome is a sweep one way or another.
Right.
When everyone was thinking that the most likely outcome was divided government. And the reason for that is that, these elections tend to have a little bit of momentum one way or another. You talked about the Republican sweep. But it is important to talk about the potential Democratic sweep. When you have a sweep, you unlock reconciliation. And reconciliation is one of those things that people's eyes glaze over and say, oh, that's technical. You don't really can do all that much, except for every single major policy change in the last 30 years in our country has almost exclusively been done through reconciliation. And then you look ahead and say, all right, starting January 1st, we restart the debt limit. December 31st, we have the expiration of almost $5 trillion worth of tax cuts. If there were to be a Democratic or Republican sweep, you could have directionally kind of the most kind of wide kind of changes in our government's history. And I think from my perspective, my job as a Washington policy analyst is trying to bookend that risk. And so in divided government, that bookend is close. In a sweep, it's really wide. And that's where I think if it does look like there's going to be a Democratic sweep, that's where you can get some of the volatility coming here, a Republican sweep as well.
That volatility, if I can sort of squash this down, I know time is a brutal way of doing that. It's around inflation. The accusation from Larry Summers, Adam Posen, is that if it is Trump and if it is a Republican, not just president, but sweep, trade, tariffs, tax, immigration. But the other side of this trade is Harris. I mean, the accusation is interventionist policies, but to what extent is she an inflationista?
Yeah, I think that's important. I think it really depends upon Congress. I mean, if there is going to be a sweep, I think you'd have to look at kind of an increase in the corporate tax rate. I think there's very high probability that most, if not all of those taxes reset. And I think what Democrats would say is that's where taxes go back to where they were under Barack Obama. Mm-hmm. There'll be concerns because we've seen as much government spending and fiscal stimulus going into the market under the Biden administration. But there's a strange argument to be made that because those taxes reset and Democrats could allow those to go up, that compared to what Trump is calling for with higher tariffs, stricter immigration, higher deficits, are Democrats becoming the party of fiscal responsibility vis-a-vis the policies where we could see a more highly likely second wave of inflation if Trump is elected and he pursues the policies he's saying. It's a lot of this flipping of the script in D.C. when we think ahead as to what each party would do after this election.
Look, we're going to get a bunch more polls in 30 seconds. We've got quite a way to run, 70, 80 days until the election. Your base case is not a sweep, but divided government. Can we just square away the probabilities?
Yeah, I think we're in about the most likely scenario still is a Republican sweep, because if Donald Trump wins, I think that he is going to have the House come with him, and it's almost guaranteed for the Senate. And so that's about a 40% probability. And then for a Democratic sweep, it's probably in that 20-25% probability. Divided government is in that remaining 35%. So that's where our base case is sweep either way, and still the highest probability being a Republican sweep, which is counterintuitive when you look at the polls right now.
Ed, thank you very much. That's why we bring you on, to get the counterintuitive. Ed Mills of Raymond James, my guest this morning on Politics. Context Matters from a beautiful New York. Here's a look at the day ahead for you. We've got new home sales at 10 a.m. Eastern, and then it is the main event. The Fed Chair Jerome Powell speaks at Jackson Hole, 10 a.m. And don't miss our coverage and interviews throughout the day from the symposium. The Atlanta Fed's Raphael Bostic, former Fed presidents Loretta Mester and James Bullard, plus the ECB's Mario Centeno, join the Bloomberg team on the ground. Mike McKee is there, our chief international economics and policy correspondent, literally waking up in the middle of the night for us. Mike, good to see you today. This is going to be a pretty interesting day in terms of threading the needle on what the market can expect between now and the end of the year. The bar is high for Powell to outdove this market, isn't it?
It is. Jay Powell is expected to dodge as much as possible specifics about what the Fed is going to do. The idea is they're going to move in September, but he doesn't want to put that as a certainty. So he'll talk about we can soon move if the data continue to show us what they've shown us so far. And I think at this point, markets have basically priced that in. If he were to say we're going to move on September 18th, then you'd get a much bigger reaction in the markets.
Yeah, I was just reading what Paul Donovan wrote at UBS. Now would be a great opportunity to outline the medium-term vision, but track record suggests data dependency and myopia. What has he got to do to sort of lay the groundwork for this cycle? Do you think that we'll get a hint about the ability for the Fed to be nimble? I mean, if you listen to some of the narrative from Collins yesterday, it really was about gradualism, wasn't it? It was about, you know, a slow, measured pace of cuts.
Yeah, as I'm talking to Fed officials here, that's basically what they're all saying. If they start the process, they're going to do it slowly to make sure that the economy responds the way they want it to, and the markets respond in a way that doesn't cause further problems. So what a best case scenario might be would be a quarter point move at every meeting remaining this year. There are 3 meetings. If they were to increase that pace, it would probably because there's some sort of problem in the economy. Maybe we get a really bad jobs report or something like that. But for right now, the idea is slow and steady, and they continue into 2025. The real question over the medium term is how far do they go in cutting? What's going to be the new neutral rate? And their general reaction from everybody I talk to is that they don't know yet. They think that the economy is growing faster, its potential is greater, which would imply a higher rate. They are never going back, if they can help it, to zero. So somewhere in that range is where they end up. And that's what the markets would really like to know, that I don't think they're going to get it today.
No. Well, look, these markets, the equity market and the bond market, they have hitched their wagon to that 100 basis points. And I think anything that sort of knocks it off that pedestal, Mike, could be injurious. We're going for a second week of gains on these equity markets, and bonds are at 4%. Mike, enjoy yourself in Wyoming and Jackson Hole. A snapshot of some of the other stocks just that are going to be on the move today. Keep an eye on these couple of movers. Workday increasing their profitability over the next 3 years. Cava boosts the annual outlook for comparable sales. They're nicely bid up 9.8%. And Ross Stores, the results beat, boosting the forecast. That's it from Bloomberg Brief. Surveillance is up next. Jonathan is in the seat. He'll take you through the run-up to Jackson Hole. That's everything from Bloomberg Brief. We'll see you on Monday morning. Let's do it all over again. 5 a.m. Eastern from New York every day.